All right, here we go, and we are live. Wow, there's a lot happening. We have more earnings rolling in this week, and we had some big names reporting earnings. We'll take a look at this, and then it's here. The rotation we started talking about yesterday, but the Dow is making new all-time highs, and everybody's darling like Nvidia and the Magnificent Seven are getting hammered. So we need to take a look at this and what's happening there. Anyhow, we also had a new trade this morning, and we closed out two trades. So we'll take a look at this. And with that said, welcome to Coffee with Marcus and Mark. As you can see, I'm still traveling. I'll be back in Austin. No, traveling back to Austin tomorrow. Anyhow, today's Wednesday, July 17th. It's my mom's birthday. Happy birthday, Mom. And what else? In this show, we are going to talk to you about what's happening in the markets and how we are trading it. And wow, Mark, the Dow had the best day in over a year yesterday.
Yeah, a huge move, and two reasons for this. One being UNH, which had just phenomenal earnings, up 6.5% yesterday. So UNH just rocketing higher, and that definitely helping the Dow, but also that rotation that we've been talking about. So the mega caps have driven this market rally for so long. The Dow was the laggard, falling behind while the S&P 500 and Nasdaq made new records, and the Dow just kind of sat there. But as we shift from these mega cap plays that have taken off and you could say are overbought, there's been a little bit of selling there, and then money going into the Dow, which is a good thing for the market.
It's a good thing, and not only in the Dow in the top 30 here, but also in the Russell 2000. So in the
Yep.
small and mid cap companies, and that's good. And we see that the rotation continues today. The Nasdaq down 2.3%, the S&P down 1.1%, the Dow up, and the IWM, the Russell, hanging in there. And if you look at our heat map, we see exactly what's happening. The Magnificent Seven right here, all down. Look at this. Nvidia down 4%, Microsoft down 1.2%, Apple down 3%, Meta down 2.7%. And then, yes, we have real estate index here, energy index, utilities, basic materials, consumer defensive, healthcare. All of these are sectors where money is flowing in right now. Even here, the financial services. I mean, overall, financial services are doing good. Insurance doing really, really well.
Yeah, everything seems to be hanging in there or up, with the mega caps and software tech taking the biggest hit. You mentioned the Russell trying for its sixth straight winning day. It looks like it might be a little tough today with the pullback that we've had, but the Russell was up 1% plus for 5 days straight. That's only happened five times since 1979.
It's crazy because if you look back over the last 7 days, the Russell is up more than 12%. I mean, it's kind of crazy. But again, it's good. We don't want this rally that we have seen here in the markets just be carried by a few big names. And this is exactly what's happening. This is why we had this expression of the Magnificent Seven here. And recently, this is where we look at the largest companies here, because these are the largest companies by market capitalization, and they also have the most weighting in the indices, like Apple, like Microsoft, Nvidia, Alphabet, Amazon, Meta, and then we also have Tesla. So this makes the Magnificent Seven. Let's see, one, two, three, four, five, six, seven. I was right. Good.
Good job.
There we go. So Nvidia dropping below 3 trillion in market cap.
Look at that. Look at that. Apple leading the way. Another stat that I saw on the Russell 2000 that's kind of fun. Bespoke Investment Group, they said that history was made yesterday. And it's a little confusing, but this will make sense. It said the Russell 2000 closed 4.4 standard deviations above its 50-day moving average. So, with such a sharp increase that you see there on that chart, they said that no other major U.S. index has ever closed at that much of an extreme. So getting so far away from its 50-day moving average. That goes back to the Dow beginning in 1900, the S&P beginning in 1928, and the Nasdaq in 1971. So you don't see that too often. In fact, you've never seen it before.
No, wow, this is crazy. I didn't know. I mean, it is running away, and this were. I mean, it's kind of a rubber band, right? I mean, we can only
Sure.
stretch it so far. This is why we see today a little bit of profit taking maybe in the Russell, but still the rotation is going on here right now. We clearly see this. All right. So we talked about United Health yesterday. Bank of America also reporting earnings yesterday, having a really good day. This morning we had USB reporting earnings, and look at that. I mean, banks right now doing really well, up 4%, also beating earnings.
Yeah, nice earnings beat, better than expected revenue, and opening higher and just taking off. So huge move for U.S. Bancorp, up over 4% after a 1% gain to begin things.
Yeah, looking at the earnings calendar here, we also had Johnson and Johnson today before the bell. After the bell, we have Discover and United. Let's take a look at Johnson and Johnson, also a Dow component, and look at that, another 3% move.
Yeah, beat on earnings, beat on revenue, and huge move for J&J.
Yeah, and this is why we see the Dow is still up for the day, everything down. It's good to see the VIX actually up a little bit, the volatility index. So I don't know if it really means that fear is back in the markets, but this helps us as option premium sellers to capture more premiums there.
Exactly. It just represents volatility in the S&P 500, and now with this movement, more options traders are expecting bigger price fluctuation from those S&P 500 stocks, which gets priced into options, which is a good thing for option sellers.
Yeah. Also, this morning, I mean, after a massive drop over the past couple of weeks, yields are slightly up. The 2-year yield up 1%, the 10-year yield up 0.5%.
Yeah, interesting, and also, like you said, after that pullback from that peak early July, I think that it's expected to see some fluctuation here.
Yeah. Looking at the Fed Watch tool yesterday, we had a 100% probability that the Fed will lower rates in September. Seems that right now it has shifted a little bit, but look at this. We're still at a 96. If you combine this, like a 96 point something, let me just change my settings here a little bit. Percent probability. So that's almost 100%, but it has changed a little bit from yesterday.
Yeah, to see the change because not much has really happened. I did see that Fed Governor Waller said that, quote, while I don't believe we have reached our final destination, I do believe we are getting closer to the time when a cut in the policy rate is warranted. He said that at a speech at a Kansas City Fed event. He also said that the labor market is in a sweet spot with job growth continuing while wage gains are easing. I mean, that's kind of summing up what we already knew. But yeah, still looks like the September target is what most traders expect.
Yeah. Looking also at the economic calendar, in addition to Waller speaking, which you just referenced, we also had a few yellow and orange flag reports, not really market movers, but overall showing that the economy is still strong. Building permits coming in above expectations, housing starts above expectations and higher than the previous month. Industry production coming in lower than the previous month, but higher than expectation. So this kind of all good news that, yeah, even though the Fed has been keeping interest rates higher for longer, it doesn't seem to be have broken anything yet.
Exactly. It supports the trend that we've seen, and that is, like you said, the economic activity still remains strong, and that comes right after strong retail sales,
Yeah.
or better than expected.
Well, oh, excuse me. Want to take a look at our positions?
Let's do it.
All right, WTF, we had two exits today. Airbnb, something that we entered last week. We exited this morning, and I'm glad that we did right in the open because ever since it has been dropping. So we went long at 146, 80, 983, And the exit this morning was at, I think we exited at 190, 149.24.
149.24. Yep.
20 right there. So that was a nice win. On the other hand, Disney, we also had an exit signal. And Disney not playing ball here. I mean, had a nice bounce, but we have seen that after we entered, it has been going sideways. And this when at some point we say, okay, it's not doing what it's supposed to do. And what is it supposed to do with our strategy? Well, we're waiting for a pullback, and then we want to see a quick snapback. Very similar to what we saw here on Airbnb. That is exactly what we are looking for. So we have this pullback and then we have this snapback. Hasn't happened. This is why we say, okay, if it's not doing what we want it to do, let's get out of this. And again, good that we did it right at the open when we get our exit signal right here, because we entered at 99.40, exited at 98.30. So, I mean, small loss, but I'll take it. Airbnb was a nice win.
Yeah, I like it.
All right. New signals today. Schwab, after yesterday getting hammered, we had a new signal today, and that is an interesting one. So we both decided to enter at the entry signal, which was at 66.26. So right now we're down a little bit.
We are. Quick pullback.
Quick pullback. So we'll see. I mean, right now we're a little bit all over the place. I think a few minutes ago we were trading already at 64, but we shall see. I mean, this was a quick drop, and right now it seems that it's bouncing back. We can maybe take a look at a 5-minute chart to see what is happening here with Schwab right now. And here we go. Yeah, this was I said. I saw right before we started the show that we were above 64 again. So let's see what happens here. But this is a new signal that we both took.
Yeah, down based on the original entry point.
Yes. All right, hopping over to the wheel. What do you know? CSIQ yesterday having a massive bounce back. I mean, we know that because of the Trump bet, it got hammered on Monday, down 11%. Yesterday, up 9%. This morning, it looked like it first wanted to keep rallying. Right now, down 3%. But I like the overall trend that I see. I like that we very quickly bounced back and that we seem to continue this upward trend here right now.
Yeah, it definitely seemed like Monday's reaction was an overreaction and just it snowballed into a bigger move. But I didn't even expect that nice of a rally yesterday, up 9.25%. So I'll take it.
For sure. All right. Halliburton, we looked at it today. Oil and gas plays are still hot today, up 1.2%. And this is where we got assigned at 34.50. We sold calls against half of our position at 34.50 and another more calls against the other half of our position at 36 for you, 36.50 for me. So right now, nothing for us to do. We will see where the chips fall on Friday afternoon. If we are trading above 34.50, we're getting called away with half of our position. If you're trading above 36, you'll get called away with the other half. And if you're trading above 36.50, I'll get called away. And earnings coming up.
Earnings Friday before the bell. And I just, not that I am really interested in doing this, especially this far away from expiration, but there's 20 cents in the roll, which would be 21% annualized for my strike. I'm just curious where we were at. Not something that I'm going to do right now, but 20 cents on a roll. I'm going to wait.
We'll see. And then there's KSS Colds. I took this trade. You did not. I sold the 21.50, and it's behaving really nicely. Right now, I'm up 80% on the calls that I sold. Not enough for me to close the calls, but I'll keep an eye on it. I like to close them at 90% of max profit. So that is possible today or tomorrow. I'll definitely do this. So calls, nice bounce back, exactly what I expected off these levels around 21, 21.50 right here. And this is working out great.
Yeah, nice trade. Nice trade.
Yeah. And then UPS. Gosh, UPS yesterday, another fantastic day, up 2%. And again, 2% might not sound a whole lot for UPS. It is. So for UPS, 2% is a big deal. So today we are slightly down, and as we can see, not a whole lot movement here, but I'm liking this move. I'm not too surprised that here we are stalling. Again, we're talking about the rubber band effect, so maybe even having a little bit of a pullback. But yeah, let's keep going, UPS.
I love it. And if it, this little pause here, okay, pause before the next surge. I'll take it.
Yeah, and we also have earnings coming up next week, so on July 23rd. So we can take a quick look and see what we typically expect during earnings here. And we see, yeah, it's kind of a mixed bag. So out of the
Yep.
last 12 quarters, 5 times we were up, 7 times we were down. The average is also around the same, around 5% up or down. So we'll see. Last time it worked out great because last time it jumped higher after the earnings surprise.
Yeah, and a little mixed, little mixed. This one will be interesting.
Yeah, we'll see. So I didn't enter any new trades today. Did you see anything that was interesting to you besides the Schwab trade for WTF?
Yeah, Schwab was it. I looked at a couple with the markets being down, but with the bigger rally that we've seen recently, I really didn't see any wheel candidates where we had strikes near support that would make sense. So nothing for me.
Yeah. All right. Well, it's this time in the show. Before we look at the markets and what's happening, do you have a joke for us?
I think I do.
All
Some
right.
might say it's a joke. Some might question it.
Well, let's see.
what do you, what do you call security guards that work at Samsung?
Don't know.
Guardians of the Galaxy.
Okay. That is a good one. And you know what? Today you win by default. I got nothing. I really got nothing. So
Oh
yeah, no,
no!
I know,
I'll
I
take
know.
the
It's
W. I'll take the
the
W.
time zone threw me off a little bit, so I wasn't quite sure when is the show, and then I got the alarm and had to jump on and didn't come up with anything. So congratulations for winning today's show.
I'll take
Okay.
the default win.
Let's see. Schwab is continuing to recover here. If you're looking at the S&P, still down. The Nasdaq still down, trading at session lows. The Dow trading at session highs. The IWM a little bit of a pullback here after a strong start in the morning, and I think this is what we will continue to see today. Just this rotation out of the big names, just diversifying a little bit more in various sectors, as we can see. We talked about it: financial services, healthcare, consumer defensive, real estate, energy, utilities, basic materials, industrials. All of these are up. So this is where I think it's good that the money is getting distributed a little bit more evenly than just in the Magnificent Seven.
Yeah, I think that that's good for the market for sure. And it doesn't mean that the tech move is over,
No,
but a little profit taking and moving into the broad market makes sense.
absolutely. Hey, hope that you enjoyed today's show. If you did, give us a like. We'd really appreciate all of the likes. If you feel that this was information worth sharing, there's a share button right underneath. Please feel free to share it with your friends or strangers or whoever one of you want to share it with. And if you're new to this show, hope you enjoyed it. If you did, click on subscribe, and then we'll see you again tomorrow. Until then, have a great rest of your day.
Happy trading, everybody.